Let's talk about home ownership and what some people feel is just outright robbery. Following a nationwide slowdown in home loan applications, government-sponsored mortgage providers, they're adjusting their policies. And starting next Monday, May 1st, upfront fees for loans backed by Fannie Mae and Freddie Mac will be adjusted. And some say those with great credit are going to be forced to pay more money to help those who are poor, credit poor. Xavier Walton joining us live now to break down exactly what this program means. So can we just make it real plain? With this new program, does that mean those with better credit scores are actually paying a fee to assist those with lower credit scores so they can qualify to buy a home?
Short answer, Adrienne, yes. But there's some nuance to it, so we're going to dive into that as well. Bottom line, if you have a good credit score, it doesn't necessarily bode well for you. The percentages, just about 1%. If you have a lesser credit score, so not that great, this really is boding well for you. Bottom line, though, this is the system that is used for home buyers. When you talk about the credit score, then the down payment, it's an update, right? So the Biden administration made the announcement back in January with the fee change for private sector originated mortgages. So the new federal rule, going to raise your monthly mortgage payments for buyers, again, with good credit scores, about 1%. On the flip side, borrowers with a lower credit score are going to get a more favorable loan term.
It's a bit of a leveling effect to where the folks who have the 740, 750, 700, those credit scores, they're actually seeing more fees and lesser for the individuals who have lower credit scores.
Groups that benefit most from this change are low to median income first-time home buyers. The change is designed to assist those low-income and minority groups of home buyers by encouraging people to buy homes. Adrienne, there have been plenty of complaints about the rule change.
Well, it's not fair to the everyday middle-class American because somebody who has great credit doesn't mean they're rich and wealthy. It doesn't mean they have a lot of excess money sitting around. And in the end, what it may very well do is create a chilling effect in the housing market.
And, I was talking to somebody about this just yesterday, and they said their entire life they have been working to have good credit. So when they buy a home, something like this doesn't necessarily happen. It almost feels like they're being penalized. So when you're trying to balance it out, so to speak, Adrienne, some people feel like there's an imbalance and it's doing the exact opposite.
Yeah, it just seems like it's not fair for a lot of middle-class home buyers who might have really great credit scores. So, yeah, Robin Hood. It feels like Robin Hood, though I'm sure a lot of people would say they are not the rich. Thank you, Xavier. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.